there have been a lot of catalysts out there that could have taken the gold trade higher. We haven't necessarily seen that happen, so we want to bring in our resident gold expert, Peter Schiff. Peter, always great to have you on the program. Love talking to you about gold. Just checking on my price action here at the moment. I'm looking at gold at 1144. With all of the turmoil that we've seen in the Eurozone, this was the time investors thought that gold would rally, and it didn't. Why not?
Well, you know, the dollar is stealing a lot of gold's thunder. People are fleeing to the dollar rather than gold, and that's putting pressure on gold. But this false narrative that's driving the dollar is the belief that the U.S. economy is recovering. I think it's headed back to recession, and that the Fed's about to embark on a tightening campaign. I think the reality is they're about to launch QE4. So if the markets perceive the truth, they would be fleeing the dollar too, and they'd be embracing gold.
All right, well, launching QE4 and talking about a rate hike in a few months are two very different scenarios. So are you saying that a rate hike is out of the cards for the Fed?
Well, look, I doubt that they're going to raise rates. I mean, is it possible that sometime between now and the end of the year, they might do a trivial quarter-of-a-point hike just to kind of pretend that they could get away with it? It's probable, but I don't think it's likely. In fact, if you look at what Janet Yellen said yesterday, particularly her prepared remarks, all she said was that if the economy evolved as they expect, which never happens, it might be possible that it would be appropriate to raise rates. Maybe it won't be appropriate, maybe it will, but even if it is appropriate, she didn't say she would raise them. It's been appropriate to raise rates for years, and they're still at zero. It's not about propriety, it's about expediency. And I think Yellen knows that this bubble is too big to pop. Interest rates have been at zero for over 6 years. Even raising them a little bit will prick that bubble, and that's the last thing the Fed wants to do.
Do you think it will, if there is this implied bubble that you're talking about, do you think that a small interest rate hike will in fact sort of pop it or take the top off the market, in the sense that investors have already maybe priced this in?
Well, you know, I think the air is already coming out of the bubble just with an absence of QE. If you look at all the economic data that's come out this year, it's pretty horrible. Yet everybody dismisses it. They expect it to turn around. I don't see it turning around. I see it getting worse. And yes, even a small rate increase will do a lot of damage. Think about how much debt we have. If you remember all the damage we did under Alan Greenspan when he kept interest rates at 1% for about a year and a half and then slowly raised them back up to 5%. The damage that has been done to the U.S. economy by the Fed over the last 7 years is much greater than the damage that led to the financial crisis of 2008. So what is waiting for us around the corner if the Fed raises rates? The Fed doesn't want to know. So it wants to keep rates at zero, but it can't admit that. So it has to pretend that it's going to raise rates without ever actually raising them.
Okay, let's bring the conversation back to gold, because gold has had 3 yearly losses. It's the first time that we've seen this in quite some time, Peter. In terms of the gold price right now, how are you advising your clients? Are you still telling them to buy?
Yeah, well, I've been telling my clients to buy gold since the late 1990s. And yes, the last few years have seen gold pulling back, which again, I look at as an opportunity for people to buy more. I'm not advising short-term traders. I mean, it's hard to tell where gold prices are going to be day to day, week to week, even year to year sometimes. But I'm confident that the trend that began in the late 1990s, the uptrend is intact, that this is a pullback in a bull market. When is this pullback going to end? There has been a lot of support. Every time gold has gone below 1,200, and right now it's just below 1,150, there has been major buying that has come in. In fact, the physical buying is there. I mean, my gold company, Schiff Gold, we just had our best month in years, and I talked to other precious metals dealers who report big sales. My offshore bank, Euro Pacific Bank, just saw a big increase in gold sales. So people are, in fact, buying gold. It's just that I think the big money, the Wall Street type money, is still reluctant to buy gold. They're probably still shorting it because they buy into this phony narrative. But it reminds me of, all the buyers of subprime mortgages in 2005 and 2006. Why were they buying these things? It should have been obvious that they were going to collapse, but it wasn't obvious. Well, it should be obvious now that we've got a bigger problem than the one that blew up in 2008, yet the same people who were oblivious to it back then are oblivious to this one.
Scott Nations, you called gold an expensive doorstop. You've done it a couple of times on this show. Take Peter on this.
Jim has actually used that term as well as my proxy.
Yeah, right.
Peter, my question would be this. You say that it seems that you're a little bifurcated here. You say that you think the Fed may raise rates a little bit by the end of the year, but that they're also going to implement QE4. Which is it? Because those are absolutely binary. Those are completely polar opposites.
Yeah, no, I think they're more likely not to raise rates at all between now and the end of the year. I said, is it possible they can go to 0.25%? It's possible, but I don't think it's likely.
Okay, what about the QE4 that you mentioned?
Yeah, they're going to need QE4 to keep the air in this bubble. Yes, QE4 I think is coming probably by next year, whether they raise rates or not. I think if they actually raise rates, they're going to have to take back those rate hikes pretty quickly. Huh?
How in the world do they raise rates and institute QE4?
No, they would reverse that. So let's say they raise rates to 25 basis points. Then by 2016, they lower them back to zero and do QE4 because the economy is already rolling over. They cannot raise rates and then
lower them back to zero, Peter.
Of course they can.
I mean, they can do whatever they want, but I don't think that would be a sound strategy for the Fed, and I don't think it's something the Fed would do.
Okay,
well,
Peter,
that's why they probably won't raise rates at all. That's why they'll probably leave them at zero.
Scott.
This would be my question. If price is truth, then and the price in the futures markets is the collected wisdom of everybody in the world. If you look at Fed funds futures, they're absolutely a lock, according to Fed fund futures, for the Fed to raise rates by the December meeting. 75% likelihood they'll increase by December, and then the likelihood that they'll increase even more continues as you go out further in the Fed funds futures. So why is everybody else wrong and you're right?
Well, I remember the subprime mortgages that we were shorting in 2007. The market said it was a lock that those were good mortgages. They were trading above par. Everybody thought that the borrowers were going to pay the money back. So there are a lot of circumstances where everybody is
Peter,
wrong.
you do a great job. Peter, you do a great job of eating for free on something you said 8 years ago. But people are trying to invest their money now. What makes you think you're right now?
I'm trying to answer your question by showing you there is a history of everybody getting it wrong. So you're asking me, how can everybody get it wrong? They have. Look at what Janet Yellen actually said yesterday.
I mean, what are the specifics now? Because you do a great job of making these outlandish predictions, and 1,000 of them come out of your mouth. 999 are wrong.
No, they don't.
And you live forever on one of them. And it sounds like you're trying to do that right now. What about now?
Look, I have made more accurate predictions on this show than any other guest you probably have. So you want to
futures now.
You've still been calling for gold to go higher, Peter, and it hasn't.
Yes, that's one thing I've predicted. You have no idea about the enormity of things that I've said that have already come true. But you're asking me a question and then you won't let me answer. Look, I'm trying to. Look,
you're not answering. Talking about what happened 8 years ago doesn't help our viewers today.
No. I'm trying to help your viewers. Maybe I'm the only one that is. But look, you've got a bunch of people who believe that a bubble is a recovery, right? The same people who didn't know about the dot-com bubble in the 1990s or the real estate bubble, they believe that what the Fed has inflated is a legitimate recovery. It is not. Interest rates going up will result in a worse financial crisis than 2008. Now, I can't help it if you can't figure that out. It should be obvious, but to most people, it's not. And the Fed has to keep
Peter, I think I got plenty figured out, and it's not just the market.
Guys, we are out of time. Peter, we do appreciate your insights, and I would say this, that we've had many people come on the show saying that they do think, in fact, in some way, shape, or form, there is going to be a big correction coming to this stock market, just because everything goes in cycles and we've come so far so fast. So I don't think that you're inaccurate in your prediction here, but at the same time, it's really all about timing. Yeah. It's about timing and knowing how to trade the market, and that's Scott's point. But having said that, great to have you on the program.
About the stock market. Great. But
great to have you on the program.
I'm not talking about the stock market.
We're going to lose your satellite, Peter. We will have you back on again to continue the conversation, okay?